Most Americans never learn this quiet truth about their shrinking dollars. Your money buys less each year, even when paychecks rise. This wasn't an accident, and it wasn't sudden. A series of decisions slowly rewired America's financial reality. And every household now lives with the consequences. America's story began with colonies desperate for stable money. Early settlers traded crops, coins, and promises to survive. British currency shortages forced colonies to print paper money. Inflation appeared early, teaching harsh lessons about trust. After independence, chaos ruled America's young financial system. Different states minted coins with wildly different values. Merchants struggled pricing goods across state lines. The Constitution demanded one national monetary standard. Stability became essential for a growing republic. In 1792, Congress passed the Coinage Act. Gold and silver defined the dollar's true worth. Money was tangible, heavy, and difficult to fake. Trust grew because currency matched physical value. Banks emerged, promising safety for deposited metals. Lending expanded, fueling farms, factories, and railroads. America learned credit could accelerate national growth. But borrowing also introduced fragility into the system. Financial booms created optimism across expanding territories. Busts followed, wiping fortunes overnight. Each crisis nudged Americans towards centralized control. Gold rushes flooded markets with sudden new wealth. Prices shifted as supply shocked the monetary balance. Industrialization demanded faster, more flexible money. Private banks printed notes backed by uncertain reserves. Bank failures erased savings without warning. Panic spread faster than accurate information. In 1913, the Federal Reserve was created. It promised stability through centralized monetary management. Few Americans understood its long-term power. World War I required massive government borrowing. Dollars multiplied faster than gold reserves. The Great Depression exposed systemic weakness brutally. Banks collapsed and unemployment soared nationwide. Trust in money nearly disappeared. Government intervened to prevent total collapse. Gold ownership became restricted under emergency powers. Americans exchanged gold for paper dollars. Money became increasingly abstract and controlled. After World War II, America dominated global finance. The dollar anchored international trade and reserves. Foreign governments trusted American economic discipline. Dollars circulated worldwide, backed by promised gold. But domestic spending pressures kept rising. Social programs and wars demanded enormous funding. Gold reserves quietly drained overseas. In 1971, everything fundamentally changed. The gold window was officially closed. The dollar became pure government-backed fiat currency. Money could now be created without physical limits. Inflation quietly became a permanent feature. Prices rose faster than public expectations. Wages struggled to keep pace. Americans blamed markets, not monetary design. Central banking power expanded behind complex language. The dollar's value slowly eroded invisibly. Inflation acts like a hidden national tax. Savings lose purchasing power every single year. Rent rises faster than most American wages. Home prices explode as cheap money fuels demand. Student debt grows heavier under compounding interest. Credit cards replace cash for basic survival. The Federal Reserve raises rates to slow inflation. Borrowing costs jump, squeezing households and businesses. Asset owners benefit, while workers fall behind. Inequality widens without dramatic headlines. Global demand keeps dollars flowing back home. Foreign buyers fund American deficits effortlessly. This delays pain but magnifies long-term consequences. Money feels abundant, yet life feels harder. Confusion replaces clarity about economic cause and effect. Families work more hours for shrinking lifestyles. Young adults delay homes, children, and stability. Retirees fear outliving savings once considered secure. Students graduate into debt-heavy financial futures. Middle-class dreams quietly slip further away. Every grocery trip reminds Americans something is wrong. The system rewards leverage, not patience or saving. Understanding money becomes an act of self-defense. Awareness offers protection against silent erosion. History shows monetary choices always have consequences. Ignorance makes those consequences more painful. The dollar reflects policy, priorities, and power. Americans must question who benefits from constant devaluation. Financial literacy becomes essential civic responsibility. Final message. Protect your future by understanding how money really works.